much of the retail sector around the world facing higher borrowing costs. In the United States, for example, from 2008 onward, interest rates were near zero, meaning many companies gave comparatively little thought to the cost of borrowing. Now, debt payments are a much bigger factor when deciding whether to expand into a new market, open a store, or launch an online advertising campaign. Many face a difficult choice. Either you scale back your plans or compensate for higher interest payments with savings elsewhere, whether it's through layoffs, reduced inventory, or just closing the stores. Here's a quote from William Blair, investment bank analyst. That's, of course, Dylan Carden. He says it's all about capital allocation. Running a levered balance sheet with debt frees up capital to invest, but when debt costs more, the upside isn't there. He's a retail consumer tech analyst with William Blair Investment Bank. To Nigeria. Ministry of Niger Delta Affairs has inaugurated a multi-skill vocational center in Edo State as part of its job creation and wealth generation programs in the Niger Delta region. The center has departments for training on various skills such as footwear design, fashion, carpentry, catering, hairdressing. This, of course, according to a statement issued by the Director of Press and Public Relations in the Ministry of Niger Delta Affairs, Diroshe Patricia. She was speaking on behalf of the Minister, Umana, who is the Minister of Niger Delta Affairs. Here's part of what he said, this commissioning is an eloquent testimony to the unwavering commitment of the federal government towards addressing the inequalities in the Niger Delta region. And speaking of those inequalities, take a look at some metrics from Edo State. Unemployment as of Q4 2020, according to the Bureau of Statistics, 49.02%. Underemployment, 15.89. So that's what, 54? Yeah, 54.82 or so percent of people in Edo State are either unemployed or underemployed. And then according to the latest Ease of Doing Business rankings from the Presidential Enabling Business Environment Council, well, Edo State is dead last, 37th. So joining us to discuss further, Shakirat Adigun, who is an analyst with financial derivatives company. Shakira, I always called you Shakira, the artist. Sorry, lots to discuss, Shakirat. Starting with the Disrupt Africa report, I mean, why do you think we saw a 57% decline in startups and what the money they were able to raise?
Okay, so 2022 was a very successful year for venture capitals in Africa's tech ecosystem.
Yeah.
And this is because there was like an 8% increase in the funds, the capitals they were able to raise, comparing from 2021 to 2022.
Right.
Yes, and this was like totaling to $6.5 billion.
Yeah.
But then 2023 isn't really looking the same, because if you compare the first quarter of this year to last year's first quarter, you will see that we're only able to raise $649 million as compared to $1.5 billion last year.
It's even worse if you compare it to the $6.5 billion in 2021. So it's a massive drop. Yeah, but carry on, yeah.
Then the volume of the deals as well was last year, the first quarter of last year, it was 175 startups that raised. But now it reduced to more than 100%, which was like 87 startups. So really, that would be the reason why there's a decline, like a 57% decline.
So what's the outlook for the startups as far as the startup scene is concerned, and what we're looking as far as outlook? What more they could raise, challenges they're facing? What do you think they're...
It's going to be concerning, because if you look at last year, the whole capital raised last year, a bunch of it was from the first quarter. And if we're following this trend now, looking at how much we have raised this year's first quarter, we'll definitely get less funds comparing if you're to look at it from last year. So I don't think...
So Q1 is basically the trend setter for how much money to expect to raise.
Yeah.
All right. As far as the moving from tech now to the retailers and the high borrowing costs that they're facing, what can you do? I mean, if your cost of borrowing is going up, what are they looking at as far as having to get out of that quagmire, if you call it that? Okay,
so first of all, the reason for the high cost of borrowing would be the hike in interest rates, and this is due to the continuous increase in inflation rates. So like the US Fed, the Federal Reserve, their benchmark rate is 4.75 to 5%, and in the UK, the Bank of England is 4.25%. So this has definitely made debt repayments higher. So now for companies or retail companies that their they're due for repayment, they would have to consider it's like before cost of borrowing wasn't something to think of, because in like 2008 thereabouts it was near to zero. Yes.
Yeah.
But now we're seeing
free money.
4.5, 4 points upwards.
Yeah.
So they have to carefully consider, is this going to be favorable to me? What does the company need right now? Do we need to fund our debt? Do we need to finance our company, or should we use retained earnings or what we have inside? Then they can also negotiate with the lenders and look for an alternative to cash payments, like offering them stake in their business rather than paying in cash. So this is like a way that's...
Well, what about as far as the outlook for fashion? What do you think going forward? Is it a rocky year ahead for retailers? Because if you tie this to what the IMF, even though Janet Yellen disagrees with what they're saying, the IMF has the report that they've put out, a rocky road ahead. Inflation is still pretty much high and so on and so forth. So if central banks continue to keep hiking, well, that means that borrowing costs are going to which means the retailers are still going to be under pressure.
Yeah.
Yeah. So so what do you do? So does that mean it's a top outlook, I guess, for the rest of the year?
Yes. So if you look at high interest rates, is also affecting the consumers.
Yeah, of course.
So we have mortgages are going to be more expensive. Their credit card balances would have higher interest. So they would have less money to spend on buying new sneakers or new sweaters.
Yeah.
So we can see that they have. This is actually showing in the reports of giant retailers like Gap and Michael Kors, where they reported a decline in sales in Q4 last year.
Yeah.
So if we're looking at this, I feel like this is expected for the sales to reduce this year.
Yeah, tough song. Now, okay, I really want to get to this. Edo States and their new vocational training center for youth, which is, I guess, a welcome development. But first of all, let me start with that. What do you make of this center that they've opened up?
I mean, the goal is for them to train the youths to acquire the technical skills in order to be able to make money for themselves and create job opportunities for others, right?
Okay.
But then,
I'm with you on that.
Let's just say they have done that and they have acquired the skills. Where are they going to get the job from?
Yes, I was going to ask you that question, but you're asking it to me. Okay, yeah, go ahead.
If you look at, like you mentioned, the metrics.
Can we put up those metrics? Let's take a look at this. We see this year going forward. We've been doing this since the elections, right? Since the State House of Assemblies and gubernatorial elections. We've made it a point to really dive deep into these states, and this is just, we haven't even gotten into GDP for Edo State. Medical spend per capita, education. We'll get into all that, but let's just, Shakirat, 49.02% unemployment, right? So yeah, this is what you're talking about.
Yes. So if they're used to doing business, they're the last on the rank,
right? And
then the unemployment rate is almost half, like
exactly
50%.
of the population.
How exactly are they going to get those jobs?
That is the question. KPMG, I think they put out I think it was a projection for unemployment, 37.3 or 37.7% for 2022, and 40% for 2023. 2023. No, 2024, I think, right? I think I'm not even mixing it up. But you're right, 2023. 40% for 2023. It was 37% for 2022. So when you look at all these centers that are being opened up for skills building around the country, and they are all being, let's put up that quote for the Umana, the Minister of Niger Delta Affairs, where let's go. Yeah, it said this commissioning is an eloquent testimony to the unwavering commitment of the federal government towards addressing inequalities around the country. We keep seeing these new centers opened up and so on and so forth. But again, what's your outlook for youth jobs? If KPMG's numbers are correct, because again, those unemployment numbers that we had for Q4, but from Q4 2020. So surely it's gone up, yes?
Yes.
So what did you do? Do you leave the country? I'm sorry to put you on the spot here. What state are you from?
Ocean State.
You're on Ocean State. I'm from Delta State, right? So you've got this convergence that keeps happening. Our producer is from Benue. I mean, you've got this melting pot. But Can Lagos fit all of us if you've got these numbers around the country?
Most likely not.
I don't know. It's interesting, but we're going to keep looking at these states as far as what they can do. Shakirat, we do thank you so much for joining us. Shakirat Adigun, analyst with Financial Derivatives Company Limited, talking to us about tech, talking to us about retail, and talking to us about Edo State and its challenges. Long road ahead. Very much indeed.